Hi, everyone. Welcome to today's webinar, Credit as an Antidote to the Rising Rate Environment. Before I hand it over to our Vice President of Marketing, Mike Darn, I wanted to share some administrative items with you. All participants will be muted for the duration of the webinar. As a participant, you have a couple ways to post your questions or chat with us. At the bottom of your screen, you'll see a ribbon with two specific options, one for Q&A and one for a chat feature. Please use the chat feature if you're having any technical issues and need to reach our host. Please use the Q&A feature to post questions about the content of this webinar. We'll be keeping an eye on the questions and try to answer them as they are asked. If there are questions that we're not able to answer or are better handled offline, we will reach out to you separately after the webinar. Now let's get started with our program. Credit Expert was founded over 20 years ago with a vision of helping to make the dream of home ownership accessible and affordable for everyone. My name is Chase Arvanites, and I want to welcome you to the Credit as an Antidote to the Rising Rate Environment webinar. I'm joined today by Mike Darn, the VP of Marketing at Credit Expert. Without further delay, let's jump in.
Hey, thanks so much, Chase, and thanks everyone for joining us today. This is actually the first webinar that we've done for real estate agents. So we're super excited to have you on. What I thought I would do, just to kind of start things off, is give you a little bit of who we are and what we do, just as some context before we jump in to the other content. So what does Credit Expert do? Well, we work exclusively in the mortgage business. So imagine that you've got a client that you're working with and she applies for a mortgage with a mortgage lender. That's kind of where we come in. So once credit is pulled, for most lenders that we work with, the lenders will be able to identify your client's credit potential right off the bat. So as soon as credit is pulled, our algorithm goes into place or goes into work and will quickly analyze their credit score. Over time, we've analyzed nearly 1 billion credit records. So we really know what we're doing here. And as you can see by this illustration here, we'll be able to show your client by credit bureau exactly how much increase they could get in their credit score in a 30-day period of time. And as you can see here with Experian, this person initially had a 631, and we are telling her that we think that she has 56 points in her in the next 30 days. So once the potential has been identified, the lender can then build out a plan using our technology as well. So we'll take what we know, we'll take all of this data that we've analyzed over the years, and we can tell your clients precisely how likely are they to get to a target score that they're trying to get to, what it'll take to get there, how much cash might they have to use, what types of actions need to be taken, and then how long will that take? And that plan will be generated, will be sent to your client. They can make everything happen, whether it's just paying down a credit card, removing an authorized user, or something else. And they come out on the other end with a higher score. So in a nutshell, that's what we do. We've been doing this for 20 years. We're really good at it. And today we work with about 60,000 mortgage loan officers. And most of the top 10 lenders out there use us today as well. So jumping into kind of the meat of the presentation here today, I certainly don't have to tell you all this, but we're in the midst of a massive correction in the market, right? So we're seeing interest rates go through the roof, right? A year ago, we were looking at rates in the 2.8% range. We're now up and above 7%. That's obviously taken a huge hit to the refi market. This data that I'm showing here from Black Knight actually needs to be updated in that it doesn't go quite to where rates are today. But you can see here that as the rates are going up, the number of refi eligible homes is just kind of starting to erode there. So we're squarely within a purchase market right now. And I found this the other day. in terms of what that's doing to affordability, right? So this was in the Washington Post, and I thought it was a pretty compelling graphic. And what you're seeing here is what a homeowner would pay over a 30-year period of time last year when we were down at 3% rates versus this year. And as you can see, for somebody that is shopping for a $750,000 home, they're going to end up paying nearly $400,000 more over the life of that loan. And so there are a lot of people that probably won't be able to absorb that into their budget. And so what it's going to cause them to do is to likely shop for more affordable homes, right? So if you look at the graph here on that 750 mark, last year, where that green line is, is about where the line is on the monthly payments for the $500,000 home. So you're probably going to have clients that are going to be materially downsizing in what they can afford, or trying to get as much as they can out of their mortgage so that they can buy the home that they really want to find. So what we also know is that interest rate, is in the news everywhere right now, but it is the most important thing for prospective home buyers. So we surveyed people last year. We did a big national sample of new mortgage applicants, so whether they were first time or experienced in refi applicants. And we asked them, what's most important to you when you select a lender? And perhaps not surprisingly, the number one was interest rate, followed very closely by monthly payment. And obviously those things really play off of each other. But that's what people are focused on. This is what they were focused on last year when the rates were really favorable. And it's certainly where they're going to be focused now. So, the fact that rates are going up has really hit the market, right? So the MBA, the Mortgage Bankers Association, is reporting, a 46% drop year to date in applications. And a lot of that is taken up, as I mentioned before, with refis. But, we're seeing, based upon the credit pulls that are coming through our pipes, and we control about 45% of the market right now, 29% drop in credit pulls during the month of May. And you can kind of see where that's happening, the gray line being last year versus the pink line happening this year. So pretty significant drop off. Consumers are really starting to think twice about things and are a little bit, I think, cautious about the market. So, the good news is that there's common opportunity for lenders, applicants, and realtors in this market. And here's where it is. So if you think about, what I explained earlier around what we do, we work with lenders. They can help applicants improve their credit score. If they are able to do that, they're going to be able to, close more loans. When they close more loans, that means that realtors are actually selling homes. And at the end of the day, if you've got a client of yours that's working with a lender that has helped them improve their credit score, that client's going to be really happy because they've lowered their overall cost of home ownership, both on a monthly payment basis, obviously, and then over that life of the loan. So we think that this is really a great time, for applicants, lenders, and realtors to come together and use a tool like Credit Expert to keep the market going here. So getting into, well, what does that opportunity look like to improve your credit score? So we launched what we call the Mortgage Credit Potential Index earlier this year. And I'll give you a little explanation as to how this came to be. So I joined Credit Expert about a year and a half ago. And one of the things that I did when I joined the company is that I was looking at some of the data that we produce. So as I mentioned before, we analyze credit records. We can see what that improvement potential looks like at everybody that comes through. And I was starting to look at this at the aggregate level. And my initial inclination was that there was going to be a lot of improvement opportunity down on the lower ends of the credit spectrum because people may not be managing their money as well, but it would really taper off and there wouldn't be much opportunity at all in the upper bands. And what I found was completely opposite of that. Well, actually not opposite, but what I found was that it was very uniform across all of the bands. In fact, what we just reported out in our May index was that 73% of all applicants below with a credit score of 760 and below could improve that score by at least 20 points within a 30-day, time frame. And so the MCPI, as we call it, we release that every month. We have a lot of data in there. We share at an aggregate level by credit band, what kind of volume is coming through in each of the credit bands, so that lenders and realtors can really understand kind of what the demand side of the market looks like. But what we've also tried to do is contextualize this, right? And look at the numbers in a way that's really meaningful for lenders and for realtors. So if you follow kind of the boxes on the right-hand side there, what we know in the 12 months ending May 31st is that 738,000 people that came through our pipes, and again, we control about 45% of the market. So you can kind of plus this up, if you will, if you want to get the full market picture there. 738,000 that would not have qualified for an FHA or an RHA mortgage could do so within a 30-day timeframe. That represents 53% of everybody that came in those credit bands. Similarly, on a conventional mortgage, right? The number gets even bigger, with 1.2 million people being able to improve their score enough to qualify. This is another point that is really important in the market that we're in right now, with home prices rising, is the need to be able to qualify for more, right? So we can help people that don't qualify yet for a jumbo loan get to a jumbo loan within 30 days. And that's a big number as well, 1.84 million. But I think what's most important right now in this environment is in this pink box down here. And these are the people that can move up by 20 points and therefore take advantage of risk-based pricing adjustments to interest rates. And that's a really big number. 69% of everybody that comes in below those thresholds, or 5.64 million, could get to where they needed to be within a 30-day time frame. So there's a huge opportunity there to look at this in a different way. What we've done here is we've mapped out where the volume is with credit inquiries that are coming in. And specifically for better rates, these are the bands that matter, between 640 and 760. And as you can see, there's a lot of volume there and there's a lot of opportunity. In fact, the 720 to 739, 72% of people could move up that band, and that'll help qualify them for rate reductions. So we've been talking about that 20 points in 30 days. We picked that as just a entry level type of thing. But what we also know is that the 20 points is just a starting point. So if you take someone that initially came in at about a 640, what we know is that 74% of them could move up 20 points, 40% of them could move up 40 points, 14% could move up 60 points, 5%, 80 points, and so on. So, it's not just about that 20. You can move up significant amounts in a relatively, quick period of time. And the other piece of this is that, again, we're talking about 30 days here. If you get your clients working with a lender that uses Credit Expert sooner than that, they're obviously going to have more opportunity to make improvements and make adjustments that'll help them move up that scale and really improve their score in a short period of time. So what does this mean? And my sense is most people on this call know this, but if you look at somebody that's taking out a $300,000 mortgage, 30-year fixed rate, they have a starting, credit score of 640, which gives them an APR of around 6.32. As you better that credit score, as you move up from a 640 to a 660 to a 680, that APR starts to come down, and it comes down pretty rapidly. And so that obviously changes into monthly payment savings, right? So if you take a look at someone that was able to improve their score by 80 points, they're going to put a lot of money back in their pocket, $143 a month, or nearly $52,000 over the lifetime of that loan. So this is pretty significant. And my sense is that there are a lot of people out there that, with the cost of housing as it's gone up, the cost of home ownership when it comes to, the cost of a mortgage, this $143 may not have seemed like a lot last year, but it could mean a lot this year, especially when you think about all of the other things that are happening with inflation these days. So the question then becomes, like, how do you as a realtor better serve your clients? And I just tried to kind of boil this down into a couple of easy steps. So step one is to work with lenders that use Credit Expert, right? So have those conversations with the lenders that you work with, ask them if they're using Credit Expert. And if they're not, we can obviously help them get there. Number two is to make sure that your lenders use Credit Assure to identify the credit potential. And again, this is what they can get to within that 30-day time frame for every one of your clients. This is a great thing from a transparency perspective for both you and for the lender. Because if you think about it, applicants are kind of coming into things blind, right? They do this only so often. Having a lender or, a realtor really take some time with them and say, hey, we looked at your credit and you know what, there's an opportunity to improve here. And that's gonna help you either be able to afford more of a house or to lower your payment or even just qualify where they couldn't before. So that's step two. And then step three is make sure that the lenders use Wayfinder, which is one of our products here, to show every client what it'll take to get there. So here, you're just going to be able to see what that potential looks like. When they run Wayfinder, we're going to be able to show them precisely what they need to do to be able to get there. And that way, the choice is theirs. They can, decide, you know what, it's actually worth it to me to go and make these changes and take the time and make that happen. Again, it can happen within a 30-day time frame, or they can say, you know what, I'm good, but it's good to know that I could have gotten here. So really kind of, the three steps: work with a lender that uses Credit Expert, make sure that they're running a Credit Assure on every client, and then making sure that for every client, they're seeing what it'll take to get there. So that's the bulk of what I've got today. Everybody that attended is going to get a copy of the Mortgage Credit Potential Index. Would love any feedback that you have on that. If you take a look at it, happy to answer any questions. Just hit us up with that. And then we're also going to send you just a quick PDF one-sheeter Credit Expert overview covering a number of the things that I just went over in terms of what to ask your lenders and what it should look like and whatnot. So again, that's all I've got right now. Chase, do we have any questions? I'm happy to take questions.
Yeah, we had a couple come in. First one is, how much would Credit Expert cost my client?
Good question. So if I didn't mention this before, we are sold and used by licensed mortgage originators, and they bear the cost of this. So it does not cost your client anything. It's part of what lenders that use Credit Expert do.
The other, did a couple more. The other is, how is Credit Expert different from credit repair or credit counseling?
Yeah, it's a good question. It's one that we get often, Chase, and it's a good question coming from the audience here. The way I like to look at it is kind of from a persona basis, right? So if you're looking at somebody that would be a candidate for credit counseling, they likely are not in the position to purchase a home right now. So they likely need help with just basic budgeting and making good financial decisions. And credit counselors are a great resource for people in that situation. It's a longer term play. It can take, several months to maybe even a couple of years to kind of get to the place where you would need to be able to purchase a home. So that's one of them. From a credit repair basis, credit repair is largely based on disputes and resolving disputes on a credit record. And so some people have issues with that, where they've got things that are lingering that need to be resolved. And credit repair would be a great option for them to do that. It is costly, so it costs the consumer usually an evaluation fee and a monthly fee after that. And again, it can take a good long while to start to see results from that. But something also keep in mind is that if you do have an open dispute in your credit file, most mortgage lenders will not underwrite a loan that is there. So when it comes to us, I think we're really a resource for anybody, regardless of the situation. So somebody on the low end of the credit spectrum that could use some help, qualifying, we can apply our tools to help them understand what that potential might look like and what they need to do to get there. People that need just a little bit more on their credit score to be able to qualify for a jumbo loan or something that will give them more purchasing power, or on the interest rate. And so literally when you look up and down the credit spectrum, we could be used, by anybody that's looking to purchase a home. And I think the other difference with what we do is that we're backed up by data. So we've got algorithms that we continually refine and refresh. And we've been doing this for 20 years. And as I mentioned, we've analyzed nearly 1 billion credit inquiries since our founding. So, we've got a precision that those other two solutions don't have.
Great. And one last one. How do I find a lender that uses Credit Expert?
So it's a good question. Another good question here. The number one way to do that is to go and ask the lenders that you work with, and see if they use Credit Experts. Again, the sheet that we're going to be sending you will give you kind of what you need to be able to have those conversations. Right now, Credit Expert is distributed through credit solution providers, so where lenders buy their credit reports from. And so we don't have a big long list of lenders that we know use our solution. It's kind of masked through the credit solution providers. So right now, the best advice I can give you is to go have those conversations with your lenders, ask them if they're using us. Again, the sheet that we're going to be sending you will be important for having those conversations. But if you're having a problem finding a Credit Expert lender, let us know, and we'll do what we can to find you one in your area.
And
any other questions?
Yeah, we actually have one last one. How long does it usually take to improve a credit score?
Really good question. I will answer that in two ways. So it really depends on by how much and what someone's willing to do, right? So all the numbers that we have been showing you and the stats that we've shown you through this presentation are within a 30-day time frame. And I think that's really important for realtors, in that you've got a client who has found the home of their dreams. They want to act on it quickly. The people that are selling the home, they want to close pretty quickly. We can turn that around in a 30-day time frame. Now that depends. Can your client go and make the changes that they need to? Are they going to be diligent in making those payments, getting the documentation that they need? And by the way, we explain to your clients exactly what they need to do here. But it can be done within 30 days. Now, as I mentioned before, if a client needs to move up more than what could be achieved within that 30-day time frame, it may take a little bit longer. There's a tool that we have that helps lenders work with people over a longer period of time, modeling it out over a year or more, and really digging into like types of changes they can make. It could take longer. But what we really go after is, that quick 30 days, what can we do to get them to where they need to be able to purchase the home that they want.
Awesome. That was all for the questions.
Cool. Great. Well, thanks everyone for attending. Like I said, if you've got any questions, you can hit us back with an email at info@creditexpert.com. That's all I've got.
All right. Thanks everyone.
Have a great afternoon.